All right. So, good evening, everyone, and welcome to Wealth Wednesday. I'm April Joy with Alla Joy and Associates, where our mission is simple to educate, empower, and equip families to build faith, family, and freedom through financial literacy, home ownership, and financial protection. So, every Wednesday, we'll bring you trusted professionals who break down complex financial topics into practical steps you can actually use and a wealth of information to implement to your future financial goals. Tonight, I'm excited to welcome someone I've known since high school. He's now a senior loan officer with New American Funding and has earned the distinction of being the number one lender in customer satisfaction in Savannah, Georgia, in the Savannah area. Please help me welcome Jarad Brown.
Thank you. Thank you, April.
You're welcome. So, of course, before we talk mortgages, let's talk about you. So, of course, everybody should have already watched our last conversation, and hopefully they got a little bit more background about you already. So, we're going to kind of move into, Jarad now, right? So, of course, like I said, we've known each other since high school. It was a long time ago.
Mm.
And so I'm so glad to be back connected to you. But some of
Yeah,
the questions, I have like, how does life look for you right now? Senior mortgage lender, father of two, like, how does life look?
it's busy, right? I'm blessed though. As you said, father of two. My son is getting ready to go into his sophomore year of high school. So he is older now than I was when I met you, right? How
Yes.
nuts is that to think? It's crazy. But with him and his younger sister, they keep me busy every single day. Mortgage industry, it's picking up steam. We're in the throes of summer. Obviously, you can feel it when you step outside. It's hot. Well, so is the real estate industry. It's hot right now, and so it keeps me busy. And obviously, faith and community works just got done doing a Blood Cancer United fundraiser campaign, which was 10 weeks long. I did it in memory of a mutual friend of ours, Marky Holloway, who passed from non Hodgkin's lymphoma. So, just staying busy, doing
Yeah,
things.
absolutely. Absolutely. So, how much has home ownership, financial education, and your daily habits helped you live the life you dreamed of?
Absolutely. So, I'm living a life that I didn't dream of whenever I was younger because I didn't think it was possible.
Right.
Right. I can remember in my grandparents' house, a 3 bedroom, 2 bathroom rancho in Largo, thinking to myself, like, if I can ever get to a point to where I can own this, I will have made it,
Right.
and thinking that that was just so far away. And for a large part of my life, it was. Honestly, I wasn't born responsible fiscally, right? Like most people, my first introduction to credit was that $500 limit on the credit card that you got freshman year of college, so that you'd get the free T-shirt, right? And like most people, I maxed it out that weekend, right? And so, there was a point in my life where I had multiple credit cards. Best Buy's the devil, right? But I had the flat screen TVs right when they came out, right? I
Right.
had I had the speaker system with the receiver and the speakers, right? And so I had a pretty big Best Buy card. I liked my clothes. So I had, at the time, it was the Abercrombie, J. Crew, and American Eagle, just all of them maxed to the gills, right? And so I've been in that position before, and I had to fight my way out of it. I've felt that before where my bills were more than what I was bringing in and paying just on that minimum, or sometimes not even being able to pay that minimum, right? Like calling them and begging and pleading with them to give me another month, to bring the balances down. I've been there, right? And it did, they call it financial literacy, but I wasn't an idiot. I wasn't using responsibility. It wasn't the lifestyle that I was living in. And it takes a whole lifestyle change to dig yourself out of that hole. One that's not easy to get out of whenever you're in it, but once you're on the other side of it, and it wasn't just that I started making money and got out. It was, decisions made on a daily basis that ended up, righting that ship.
You're right. I think that's the misconception too. And I think we touched on this the last time we talked. It's just like anything else with weight loss. You didn't put the weight on today, it's not going to be off tomorrow. You got to put those things in place that are going to help you, get to that next step, that next goal, and just continue. Like I watch you, your little map you put up of you running around the city, and I'm like, I will eventually be able to run through the city like,
You've known me long enough to know that that don't come natural at all to me. That is a hard grind,
yes,
for sure. But I'm getting on up there. 44, going to be 45 before I
yep.
know it. So I'm trying to keep the heart ticking.
Yeah, for sure. So, what habits have you learned that you still practice today as you continue to accomplish those goals you have?
Yeah, the biggest thing for me was starting to treat credit, and credit cards especially, as if I was taking money from another human. I've always been
Mhm.
the type that, if I came to you on Monday and I borrowed $5, or let's say I came to you on Monday and I was like, hey, I need some lunch money. And then you said, okay, well, how much do you need? Right? And I would say, how much do you have to offer? You say, I have $500 that I can offer you. Now, back in the day, I'd be the guy be like, give me the 500 and I'll pay you back. Right? I would take more than I needed. I'd take more credit than I needed. That's why I maxed out my first credit card. But now I have the responsibility to say, I just need $5 for lunch. Right? And so when it comes down to paying back, if you think of credit cards like you're borrowing money from humans, most people are good people, right? They're not going to take every penny from you, that you have that you can lend them, right? Most people are only going to take what they need, and they're going to pay you back when they say they're going to pay you back, right? With the credit card companies, I was saying, give me all 500, right? And then when the due date came, I was like, what's the minimum amount I can give you today without me being in trouble? And they'd be like, man, at least give me $25 of it back, right? And I'd be like, I ain't got that, right? Like,
Right,
so it was starting to treat credit as if like if the Visa or the Amex was a human being, using it responsibly, being who I am in real life, but with those cards. And so I still do that. I utilize credit cards. I don't even carry a debit card. I carry my Amex with the points on it, and every purchase goes on that. I do it because it's more secure than a debit card. If it gets lost or stolen or somebody gets into it, they don't have access to my money. They only have
right,
access to that credit card, and the credit company, especially Amex, will protect you in that situation. And I do it for the Delta points so I can fly, right?
right.
But I pay that thing off every time I get paid. Every time I get paid, it goes back to zero, no matter what. And so when I'm using it, I don't feel like I'm using free money. I know that I got to pay this thing off at the end at the payday, right?
Right.
And so it's as it's adding up, I'm looking at it and I know what my paycheck's going to look like, and I'm like, all right, I got it, right? And then having the discipline to do it back to zero again every 2 weeks, that thing's back at zero. And so doing that has really helped me not get in over my head on debt and
Yeah.
not be back to who I was, in college and first couple of years out.
Yeah. Because those are definitely those years where you don't know much of anything and you're just, this is accessible. So we're like, oh, we got $500 on here. Let's just spend it. And it's like not really understanding how that looks to pay it back, what the interest looks like, all those small things. So,
Figuring it out. Yeah, Dr.
exactly.
Brogdon, Mr. Brogdon didn't teach that in economics,
He did it. He did.
unfortunately.
So let's start with a question that we hear all the time as realtors and in the lending industry as well. People just say, you know what, I'm just going to keep renting. What would you
Mhm.
tell them?
Well, I'm in the habit of asking more questions of people than telling them things. I learned that pretty early on in the mortgage industry that not everybody's the same.
Yeah.
So what I would ask somebody if they're like, no, I'm going to keep on renting. Why? Why do you feel that you need to keep renting? And then listen to the answer and, give advice off of that answer, right? Because for some people, renting is the right answer, right? I know I'm only going to be here for 6 months, right? I know I'm moving out of the state in 1 year, guaranteed. I know that I just signed up for the military. I don't know where I'm going to be deployed to, right?
Right.
Those are good reasons to rent. Um, or vice versa, I'm going to keep renting because I don't think I'm ready. Okay, well, why? What is leading you to believe? Well, nobody in my family's ever bought before. Oh, well, I don't make a lot of money. Well, I too was an idiot in college, right? Like there's things.
Right.
And in those situations, then we can have a further discussion and, kind of dispel the myths associated with buying a home. Some people see it as a mountain to climb. It's really not. For some people, there's work to be done still, but you'd be surprised the vast majority of people that will put on an application and they're closer than they thought they were. Even if they're
Right.
not there, they're like right there, right? And to see the joy of, oh my God, I can own, right? Like I don't have to rent. It's something that it's one of the things I get out of this career that I absolutely love about this career is when people finally realize that they can do something that they maybe first one in their family, right, to ever do, or something that they thought they could never do, right? Because I
Right.
remember back whenever I was living in my grandparents' home and like, if I could ever just one day own a house like this, right? Like, I've been there. So, like, I know the joy you get whenever you do accomplish that task.
Absolutely. And I think that just goes along with, one of the reasons why you are one of the trusted professionals that I talk to and that I want to bring on here because I think that people need to understand that there's some real, honest, straightforward answers that could get you where you're trying to go, and that there are people that have the heart behind it to help you get there. And I
Right.
think that people need to know that you got to pay attention to who you're taking your business to, if they're going to be helpful. Those things are important because you're in a partnership when you're trying to buy a house. There's a lot of people in this partnership with you, and
Very
having
much
those
so.
trusted people.
Very much so. I tell clients all the time, I'm like, I'm not going to retire off of this deal. My job is to give you good information, help you make smart decisions, close on this home, and then continue being your lender past then. I'm
Right.
getting older, but I still got a lot of years doing this in front of me. If I ever
Right.
want to retire, it's going to be because my clients came back to me time and again, because they sent family to me time and again, right?
Yeah.
So you make sure that you're working with somebody that wants to be your realtor or your lender for life. That's not in it for that deal. That they want you beyond that deal. Is
Right.
it
Right.
like
Right. So, from your perspective, just in your own personal and professional, opinion, besides owning a house, right? What are families really gaining when they just make that decision and buy a home?
so beyond just the roof over your head, right, which you can get from renting? Owning a home sets you up for the future. It's a future play, right? Sometimes owning your house is cheaper than renting, but not historically, not all the time cheaper. But what you get out of it that most people don't know, one, most income levels you can write off the interest that you're paying on your home on your taxes, right? So you get a tax write off, you get some of that back. And especially when interest rates are elevated as they are now in the mid sixes, which is honestly a historical medium but elevated higher than it was a few years ago, that's a good chunk of money that you get to write off on your taxes at the end of the year. You also get savings. It's almost like a forced savings account. Every month that you're making your mortgage payment, a portion of that is going to the principal balance. As that principal balance gets paid down and you owe less and less on the home, and as the value goes up and up, that savings account grows, right? And it's not staring you in the face every day to where you're going to go, bust open the piggy bank and go spend it, on a European trip. It's a
Right.
little harder to access than that. And so it's almost forced discipline for savings. Another huge thing is leverage. It's an asset. From the day that you own it, as equity grows, that equity is an asset that you can borrow against. If you ever have a family emergency, a large bill, something you need, you can borrow against the equity that you have in your home. Equity is one thing that you will never, ever have if you rent. The person that you're renting from has tons of it, right? And every
Right.
time you make your rent payment, they are gaining more of it, right? But you will never have that equity. And it's overlooked as an overlooked aspect because it's non-tangible, because you can't, Scrooge McDuck swim in equity, right? Like you can't do the backstroke in your safe of equity, right? But it's there and it's available to you in a time of need, and it'll be available to you later in life.
Right. So, I think that's the part that people need to understand. A lot of times that immediate, okay, house versus renting, may look different. It may be like, well, right now I could still rent, and probably pay about the same amount. But in the future, it just makes more sense for where your money is going and how you could utilize that as you continue to pay it down.
Yeah, and it compounds, right? And it's like a snowball rolling down the hill. The longer you're in the home, and the more of your monthly payment is going to principal, right? So your payment that's going to principal, it's amortized. So up front, it's a lot of interest loaded, but the longer you're in that home and the longer you've been paying on that home, more and more of your monthly payment is being applied to that principal, which is growing your equity in the home. So yeah, I mean, I tell people that if you can buy, if you're able to purchase a home, most of the time it's better than renting outside of, those places like when you know you're going to leave, or if, it's your first year in a new city and you don't know what part of town you want to live in yet, right? Like
Right.
things like that.
So I guess my question too is, when it relates to the financial foundation of owning a home, right? And we talk about a lot of different, we use a lot of words, we talk a lot. And of course, I think the two other people that are on here right now may be realtors, so they may have heard some of these terms, some of these words, of course, right? But I kind of want to make sure that on all levels, anybody who sees this on the YouTube later kind of gets the understanding as well. So I kind of want you to go into a little bit about the appreciation, the equity. You talked a little bit about it, but you can go into a little bit. And then I want, even though this wasn't in our initial conversation I sent you, something that I have seen and heard of and know now better being in the field is how many people are 1099, self employed, and there's a lot of things around that. And I think we have these, realtors on the phone. So they are, 1099 contracted with and making commission. And I didn't realize how much that will affect purchasing a home later if you're not covering things on the front end, your taxes
Right.
and all those things. So if you can kind of talk a little bit about that as well.
Yeah, for sure. So, I mean, let's dive right into that one. For self-employed and 1099 borrowers, we tend to see more and more and more, right?
Yeah,
And even straight commission. I'm straight commission too, just like realtors. I only eat what I kill, right?
right.
And so, if you're 1099 and you're filing as self-employed, what you typically want to do is buy a home, know when you're properly planned to buy your home, right? So, one of the benefits of being self-employed in 1099 is you get to write off things on your taxes, right? And who wants to pay more taxes than they have to pay, right? So knowing ahead of time that, hey, I want to get approved for a home, as a lender, I can help you structure your tax returns in a manner that limits your tax liability but maximizes how much you can afford. And we do that because not all write-offs are tangible in nature, right? So if you write off food and entertainment, that's tangible. That's a cost. You spent money for food and you spent money for entertainment, and that was a cost of you having your business. But depreciation on a vehicle, depreciation isn't a real cost. Mileage isn't a real cost, right? You obviously got to pay for gas and there's wear and tear on your car. But the way it's set up in taxes, mileage itself, driving a mile, isn't a tangible cost. So I can add that back in. So while you're not paying taxes on the amount that you were able to write off on that, I can add it back in. Business use of home is another one. A lot of realtors will use, right? So while, write-offs like cell phone bills and things like that do, come out of what your net is, what we can use for your qualifying income, there are things we can add back. And what I tell people is, if you came to me, April, and you're like, hey, I know I need to buy a house next year. I've had a really good year. I know I need to buy a house. I would take an application. I would look at what you're trying to purchase, what the monthly payment would be. I would look at your current liabilities, and I would say, okay, in order for you to qualify for a conventional loan on this, you need to have this much income, right? You grossed this much, so you can write off this much, right? We can limit that tax liability. You don't have to claim all of it. We can write it down to here and you'll still qualify for the home. It's just proper planning ahead of time. And then once you own the home, if you get something you like, something you know you're going to be in for a while, then years after that, you write everything off. Back to writing everything off, right? Back to limiting that tax liability, which is important when you have the ability to do so. As
Yeah.
far as your other question, the equity, Typically annual growth somewhere between 4 and 5%, right? We've seen it explode over the last few years and just absolutely go crazy, but typically 4 to 5% return, almost guaranteed. Unlike the stock market, to where things can go belly up and you can lose value, mortgages and property outside of 1 year in 2008 has always gained year over year at an average rate of about 4 to 6%. It is a safe investment. It's a safe place to put your money. And some years, like we saw, back in 2022, 2023, when those values explode, you get a whole lot larger return, you know, than that.
Sorry. I think that um people definitely have a misconception about that as far as their taxes. Like we get it. And it makes plenty of sense what you're saying. You don't want to write off all because that's what people do to
Right.
make sure they're not paying as much taxes. And I didn't understand. I didn't know anything about that. So, I went through a class and they were talking about you make 200,000, but you don't wrote off, 85,000 or
Right.
whatever, and then now you can't qualify for the house that you could have at 180
And
or you
and you
know
said we have some realtors on here.
yes,
The example that I use with clients, because I like making things smaller, and it's not to, you know, downplay importance, but it's to make it easier to understand. The way I tell clients, I was like, if you work at a lemonade stand and your buddy's paying you $5 an hour to work at the lemonade stand, and you work 5 hours, when you walk away, you made $25 at that lemonade stand, right?
right,
He owns the lemonade stand. If he sells $200 worth of lemonade that day, he did not make $200 because he had to buy the lemons, he had to buy the sugar, he had to buy the ice, he had to buy the cups, right?
right,
Those are his expenses that he incurred to make the $200. So what he made was at 200 minus what it cost him to make it. Well, that whole cost to make is whatever you tell the government it is. And if you tell the government that it cost me more to make the money than what I made, i.e., a loss,
right,
then we have to go with that, right? We're not the IRS, but when we look at the tax returns, like, are you lying to the government? Right?
right,
Like you said, nobody else said, you said that it cost you this much to make this much, right?
right,
And so I get why people do it. I would do it. I'm unfortunately on W-2, they don't let us 1099, or I would be doing it. But you know, I don't blame people for it. That's one of the benefits of being self-employed. But if you want to borrow money, you have to show that you are making money. And when you break it down to lemonade stands, buyers tend to understand it a little bit better. They're like, "Oh, yeah, no, you're right. Just because I sold $200 worth of lemonade doesn't mean I made 200. You're right, right?" And so then they kind of get it.
right. And I think being on one end without trying to buy a house, I wasn't aware of that. And so the first time I heard it, I was like, I think people need to fully understand this because they're limiting themselves.
But also know there's options, right?
Yeah.
They're not as palpable. We're talking about Fannie Mae, Freddie Mac guidelines here, but there are non-QM loans that will just look at your bank statements, right? They'll
Hmm.
look at what your bank statements are, your deposits, and they'll average out your deposits and come up with an income number from those.
Hmm.
Typically, those loans carry a higher interest rate and higher upfront cost, but it's because that lender's taking more risk. And at
Right.
the end of the day, that loan isn't sellable to Fannie or Freddie, which means that the lender can't offload it, right? Mortgages are bought and sold, they're debt. So just like a collection, right? Um, Somebody can buy the right to collect on your mortgage, and we call them servicers, right? You've heard of probably Mr. Cooper or Lakeview or whatever. Those are the big servicers. But ultimately, what those servicers, when they buy the debt from a lender, what they want to know is if they need to offload it, if they need to cash in and get some cash on hand, can we ultimately sell this to Fannie Mae or Freddie Mac? And if the answer is no, then that paper is less valuable. That's more risky paper, right? Because
Right.
they can't just automatically offload it to Fannie or Freddie. And so they carry higher interest rates and more cost. But there are ways, and especially right now, where lending is loosening up a lot. Not getting back to where it was back in 2007, where we called them ninja loans, but it was no income, no assets. People would just tell you it was like applying for a credit card, basically. Like, I'll
Right.
make $100,000 a year. Like, cool. right? No pay stubs, no nothing. We're not getting back to that, but people are coming up with new creative product, like bank statements, loans, and things like that that will allow for, a means to an end, right? If you've only
Right.
been in real estate, 2 years, but you've made a lot of money, but you've claiming none of it, like there's ways to get you in a home, right?
Yeah.
Or that truck driver that's been doing it, for 30 years and has a lot of income coming in, but you don't see a whole lot of it, on
Yeah.
his tax returns. There's ways to get those people through. It's as a means to an end if they can't wait.
Got you. Got you. So, when someone walks into your office, what are like the first things that you're kind of evaluating when you sit down with them? I know you said that you asked them why they want to wait or certain things, but like what are some of the things you kind of start with?
Yeah, so obviously we want to know the goals and aspirations. But the three things that all lenders look at, the three C's, right? We look at credit, we look at capital, and we look at capacity. Okay, so credit, straightforward. What is your credit history? People know about the credit bureaus and their credit scores. We're also looking at what is your credit history. Have you had a bankruptcy, Chapter 13 or Chapter 7? Have you had a foreclosure? Right?
Hmm.
Apartment collections, right? Like, because that's housing. And then other installment or monthly bill collection type of things, repos on cars. And so that's the credit side of it. How credit worthy is this person? Does this person, when they borrow money, do they pay it back? Right?
Right.
Capital is obviously money. Does this person have money to make down payments? Does this person have money for the closing costs? Does this person have money, if needed, to pay off debts before closing? Right? We look at their credit, their capital, and their capacity. Capacity is your capacity to pay the loan back, right? You probably heard the term debt to income ratio, if you've ever looked into buying a home. How much income do they have? Is that income steady? What is their current debt load in comparison to that income? Can they make their bills on a month to month basis? And if so, how much more could they add to that and still be making their payments on time? So, the big thing that we're looking at anytime I'm in an interview with a client, my first question is always, okay, so what brings you here? Because I want to hear what their goals and aspirations are. I want to know where they are in the process, whether they're just now starting to maybe think about buying a home or whether they found the home that they loved yesterday, called a realtor, and now they're trying to put in an offer before somebody else gets it, right? So I got to figure that out first. The second is, so what do you do for a living? And then just pause and listen, right? Because they'll tell you, most people will tell you the stories. In there, I'm looking for, how do they get paid? Are they salary? Are they hourly, which could be variable? Are they commission? Do they have bonuses? Right? Like, how are you getting paid for what you do for a living? Third, would be, what is it that you're looking to do? So we're looking to buy this house. What are you currently paying in rent? Right? How do you feel about what you're paying in rent? Right? Do you feel like, are you strained month to month, or do you feel that you have some wiggle room there? Right? And so those conversations, typically my first conversation with the clients, about 30 to 45 minutes of us just getting to know one another through these, you know, loaded questions.
Okay. And someone had a question, so I was going to give them a chance before I switch topics. Let me see here how I. All right. If you have a question, I think I can't see the name. It just says Samsung, but you can unmute and ask your question. Oh, okay. Let's see what it says. My phone went dead when he was discussing buying over renting. Could you please repeat the tail end of that discussion? Also, what would be the one main reason to buy now in today's economy?
Okay, those are great questions. I can't remember what I said at the tail end, but the gist of that story was, if you have the means to purchase now, purchasing now is always the answer. And that leads me to your second question. You can't time the market. Real estate in general is never about timing the market. It's about time in the market. The earlier you get into the market, the more equity you're going to have over time, right? So it doesn't matter what the interest rates are. The fact that home values, all but 1 year in the history of real estate, home values have gone up every single year. The houses are going to become more and more expensive. They're going to go up in value, which is a good thing. So if you can buy now, lock in today's pricing, if you have the ability to, you are going to gain more than if you wait 5 years and lock in that pricing. Even if interest rates are lower at that point in time, you're going to be paying more for the house and you're going to miss out on all the equity that you could have had over that period of time. So you'll hear realtors and lenders, especially, talk about the urgency of getting into a home if you have the ability to now. I've never bought a house and said to myself, "Hey, I wish I would have waited a few years to do that." Right? I've I bought houses and they've gone up in value, and I look back and like, wow, I can't believe I paid $115,000 for my first house, my 3 bedroom, 2 bathroom ranch, 115. I like that's nuts to me. And then after the next ones, I can't believe I bought that house for 250 in Southbridge, sold it for four. That was I stole it, right? Like it's you never hear people say I got in too early, but you hear people all the time say, I wish I wouldn't have waited. I wish I would have gotten the house then. Now that same house that I was looking at 2 years ago that was 275,000 is now 340. I wish I would have bought it 2 years ago. Right. So that's why we speak with urgency because we see it and we know. We know that home values go up. And again, you can't time the market. It's time in the market. It's the longer you're in it, the more equity you're going to have, the more wealth you're going to build. Thank you
Okay.
for the question.
Yes. Just so you guys know, if you're watching live, drop your questions in the comments. We're going to try to answer as many as we can before we wrap up. Um, so on the back of what you just said, I have a question, and I'm just going to put this statement out there because it's been told to me a couple times that typically a lot of minorities tend to only buy two homes in their lifetime on average,
Hmm.
and other people tend to buy five.
All right.
So my question is, and I know there's a lot of reasons behind those things, of course, and part of that is what I'm trying to help with, knowing earlier so that you could put the steps in place to be more successful.
All right.
From a personal perspective, because you've bought more than one home, but also on a lending side of that, and we're talking equity and things like that. How long is like a good time to be in each of these homes to build the additional equity to purchase the new home, to purchase the new home, to continue, to get
Yeah.
that dream home that you want and almost have equity kind of cover a lot of it? What does
Yeah,
that kind of
that's
look like?
that's a great question. I think I have my head wrapped around it.
Hmm.
The average first-time home buyers in their home, an average of 5 to 7 years. That's been historical since I got in 15 years ago. That number has shrunk now to 3 to 5 years, right? And a lot of that has to just do with the equity boom that we saw the last few years. I think it's going to go back to the 5 to 7 on the first house. Your first house needs to be bought. It's never your dream home. It has to be your best investment, and it has to be something that you can afford on a month-to-month basis so that you can set the stage for the purchases that are to come. You need to be making extra payments on your first home. It needs to be affordable to and living within your means to the point that you can then turn to your second, right? So as I said, my first one was 115. Whenever I went to buy at the time, I could have bought 185. And I saw 185 that I loved, right? I went with the 115 because the payment was more affordable. It was more within my budget. I knew that I could have all the other credit cards paid off, dig myself out of the hole because I had extra money each month. I knew that my income was going to go up year over year. So that house was only going to become more and more affordable. And I bought it on the lower end knowing you know Windsor Forest, it was in Wilshire. So like I knew that it was going to go up in value, right? From where I was buying it. So your first one's your stepping stone. It's you don't have to love it. You have to be safe, right? You have to have the shelter, right? Some people, depending on whether you drive to work or walk, obviously location could be important. But more than anything else, it has to be a good investment, right? Your second home is really when you start to get a little bit nicer, a little bit better. This is typically the house that you're going to get married in, have children in, and you're going to outgrow that house family size wise. But that's typically a 5 to 7 home as well. Your third is supposed to be kind of your career home. This is the house where you're going to raise your kids. This is the one where you bought it in the right school district, the school district that you want your kids to go to, right? Maybe it's near the church, it's near the social things that you want to be in, but it's still not your dream home, right? You're still being conscious about your decision making with it. And then the fourth one's typically your dream home. The fourth one, the kids are out of the house, maybe even out of college, they're on their own. You have worked all this time. It's time to treat yourself, right? You get the house you always wanted to live in and the location you always wanted to live in. And most people stay in that one about 10 to 12 years before they downsize to that final home, right? That final home is typically around your grandkids, back around family, less yard, less house to keep up with, right? That way you can enjoy your golden years a little bit more, maybe a little bit more travel, spending a little bit more money overseas than you are in your home, right?
Right.
Cashing in all that equity. Typically, that house that comes after the dream home's bought in cash. Right, because you have already done the right thing on home one, all the way back there on your first decision, you did the right thing, and on the second one, then you did the right thing, right? And so now you're in this position where you're selling that house, taking the equity, buying your cash house, no mortgage, retirement, see me in Tahiti, right?
Right.
Like, and so those are the steps. Why certain people do not take those, um, everybody's situation is different,
Right.
right? Like that is like the perfect boom, 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 boom. But like, so that's not to say that the person who's already 30 and has 3 kids doesn't need to buy their first home, right?
Right.
It's still start, right?
Right.
And maybe yours is only 3 or 4. We're seeing that average age of first time home buyer, it increases every single year. It's going higher and higher. So the idea of getting 5 in, it,
Yeah.
it's literally unattainable, but there's still ways to do it and structure it and plan appropriately so that each one is a stepping stone to something better, something greater, and bet more towards your financial goals. And that's all about getting with a good realtor, getting with a good lender, and maybe even a financial planner. And figuring out, okay, well, where am I in life? And being truly honest with you, where am I? Where am I financially? What's my budget? What can I afford? Right? And but you can't take step two until you take step one.
Right.
You can't be a second time home buyer until after you're a first time home buyer. You definitely
Right.
can't be a fourth time home buyer until you're, a third. So it's getting that first one in. And that's another reason why you'll always hear urgency out of realtors and lenders that you can't start that process too early in life.
Right. And I think that's very beneficial for me and I'm sure other realtors because where we may understand certain things, it's good to hear it plain because it makes it easier for us to explain this to our clients that are trying to buy and they're trying to buy this house here not understanding how if they downsize their immediate you know, desire, how that could blossom later on. And I think that's very important, especially if if they are older. So having the right lender, having the right realtor that can explain to them what the best option is for them, because obviously it's individualized by person. Like everybody's
Right.
situation is different, but being able to look at their whole situation and say, what is that end goal that you're looking for? And let's set up a plan. And I think that's very important. And when I talked to you the first time, that's what I heard from you. It's like a lot of people can just say, I'm just going to make some funky little deal and make it work to just make this sale. But what's more important is getting them in a situation where, like you said, now they're referring their children and their grandchildren, and they're buying their second and their third and coming back. And I think
Yeah.
that's
I got
very
a Gulf
important.
I got a Gulfstream employee that's under contract right now. This is the third home he's bought for me. I did both of his brother's loan and his mother's loan since I did his first one. He bought his first house at 24. And yeah, he is family, right?
Yeah.
And like all my clients, anytime I give advice, and as I sit here, I'm in my brother's home, he's downstairs cooking dinner. I talk to people as if they're my brother.
Right.
I try to put myself in whatever position, and I lucked out that I've been in a lot of different positions in life, right? Like so I speak to clients as if they are my family, and I'll say it out loud to them. I'm like, well, if I was your older brother, I would say do this, right? And this is why I would say do this. This is why I think that's sound advice, right? Or, however it is, because the more I can empower people to make strong decisions. I can't make them for them. I can't make them do anything. I can't make them fix their credit. I can't make them save for a down payment. I can't make them do anything. They're going to make themselves do it. But if I can empower them with knowledge of not just what to do, but why it's going to work, they're more apt to do it. And as their life becomes better and they get on to, buying their second or, I have past clients be like, hey, my wife and I, we never thought that we'd be able to afford a place and be able to have a second child. My wife's pregnant. We're having our second now. I've already called my realtor. What does it look like for us to get another home?
Right.
Yes, this is what I'm talking about, right? Like, let's go, let's grow,
Yes. Yes, absolutely. So for someone who isn't ready today,
Mhm.
and thinks it might be this long, daunting process, do you think, well, not do you think, what is your professional opinion on could they be ready in 6 months? And we know it's individualized, but people think it's so long and so far away.
It depends on how dedicated they are. Nobody's that far off, right? Like credit is one of those things that it is forgiving. If you can stop the bleeding, right? I call it pulling the anchor out of the water, right? Like if you can throttle down on your boat and try to go as fast as you can. If that anchor's still in the water, you're not going to go nowhere, right? That anchor's behaviors. So if you can pull that anchor and start like, okay, today is the day that I start getting this stuff correct, right? And it's important to get with somebody who is trustworthy, somebody who's not making money off of trying to help you with your credit. I'll say that again. Go with somebody, if you're doing credit repair, with somebody who is not making money, that you're not paying them money to help you with your credit, whether it be faith based, community based, or a lender who only gets paid if you close on a home, right? Those are people you want to talk to about credit. And I don't mean to badmouth credit repair. There are some good ones out there, but it's one of those things like, I ask you, April, would you rather pay me $200 or $500 to paint your house, or would you rather pay me $200 a day to paint your house?
Right. $500.
500, right? Because if
Right.
you pay me $200 a day, it's going to take me a week, right?
Right.
Credit
Right.
repair is that way. Once they fix your credit, you are no longer a client of
Right.
theirs. There's no need for them. So they're going to go as slow as humanly possible, fixing little thing here, much of which you could do on your own, especially
Right.
with AI. AI, such a blessing when it comes
Oh
to credit
goodness.
repair. If you're not
Trust me.
using AI, ask AI. Upload your, Credit Karma, print it, upload it into AI. What should I do? It's going to tell you better than Jarad Brown. I swear to God, it's not wrong because it's all algorithms. It's all algorithm based. But that's big advice. So I think somewhere on here it's like, what's the biggest mistake credit wise? Don't pay somebody to fix your credit. You don't need to pay somebody. All you need to do is start making decisions from that point forward. Credit is forgiving. You could literally foreclose on a home, and 7 years later, a mortgage lender is going to lend you money to buy another home. You can take a whole home that you borrowed hundreds of thousands of dollars, not pay on it, and then 7 years down the road, somebody's going to lend you money to buy another house once that clears, right? Credit is forgiving. So if you start that process early, if you start that process today, you can dig yourself out of almost any hole. For me personally, it was a year and a half on all my credit card debt. It was a year and a half from the day I said, I'm done. I'm done with this. I'm done with it, to get caught up just to where I wasn't in collections and late. And then from there to catch up to where I could make more than just my minimum payment, and then catch up to where everything's at zero. Take it in steps, but start the process today. It's a lifestyle decision you just got to make and then hold yourself accountable to that decision.
Yeah. Yeah.
And
And
sometimes it sucks. Sometimes it feels like, oh man, I'm throwing all this money at this and my score keeps going down,
yeah.
right? It doesn't like 6 foot tall brown hair guys, right? Like it don't like me. Credit
Right.
don't like me, and I've felt that. I have felt that before. But if you stick with it and you stay disciplined, it will like you. And then one day it's going to really like you, and
Right.
it's going to smile on you real hard.
Right. And that's one of the things that I again enjoy talking to you about because you're giving those just regular nuggets in the day to day of what you can do to put yourself in a better position. Because I think again, if you don't know, you continue to be daunted and like haunted by these things that if you start today, it will get
Right.
better. And
Yeah.
I
And
actually have a
talk to someone.
resource that
Talk
is
to
free.
right.
I actually have a resource that is free.
There
So
we go.
I any buyers that come, I send them. It's a nonprofit called Operation Hope, and I actually will be having her come speak in August to discuss their program more. But any
I'll
of
have
us
to
can
check
take
that one
advantage
out.
of it. Yeah, any of us can take advantage of it. It's a free nonprofit, so you don't pay for anything. She'll we meet with you weekly, monthly, kind of whatever you need. Um, and then also I think, and you can agree or deny on this, but I think even talking to the other lender that I spoke to, like everybody's usually so scared of this hard pull on their credit, but it's
Hmm.
like pull it so you know what you're dealing with. That's my opinion based on
Yeah.
what I know, but you give me yours on that.
We do a soft pull
Yeah.
at New American Funding where we pull two bureaus. So, as most people know, there's three credit bureaus. Within those three credit bureaus, there's multiple scoring models, right? So, the scoring model that mortgage lenders look at isn't the same scoring model that car dealerships look at, or that home furniture stores look at, or revolving credit cards look at. There's different scoring models for each of those, right? And what it does is it puts weight on different aspects of credit. So, whereas we really care about installment loans, especially long term installment loans, we care about timely payments on those. We don't care as much about balances to your limit on your credit card as, say, a credit card company would, right? They
Right.
care more about that. And so, within these three bureaus, there's six or seven different scoring models, six or seven different scores. And the question I always get asked is, why doesn't your credit score match what I'm seeing on Credit Karma? Right?
Right.
Like, it says I have a 680. You're saying I have a 620. Like, what's that about? Right. And the reason that is most of the credit monitoring sites do what's called a blend. They take all the different scoring models, within whatever bureau they're looking at, and they average them, for better lack of a better word. They blend them together to give you a score, right? And so it could be that you're really, really strong on your credit card score, but you had a student loan that went late for a year and a half, right? That's keeping your mortgage score down. And we take the middle score out of the three, right? So we don't use TransUnion or Experian or Equifax. We use whichever one's in the middle. We throw out your highest score, we throw out your lowest score, and take the middle one, no matter which bureau it's with. So I would recommend getting with a lender, whether it's me or the other lender, and having your credit pulled and getting a copy of it before anybody pulls your credit ever, ever, ever in life. Will I receive a copy? I don't want to receive like a little sheet of paper that tells me my score. I want the report that you're looking at.
Right.
Some lenders will give it to you, some lenders will not give it to you. If you're going to have it pulled and take that hard hit, make sure you receive a copy of your credit report. That way you can scan it into your system, run it through do whatever you want to with it. It becomes yours.
Right.
You do get hit if you have low credit scores and you have your credit pulled a lot. Your credit's going to go down with a hard hit. Now, how much is it going to go down? Not much. Not much at all. It makes you look credit thirsty. So, what it's showing the credit bureaus is that you're credit thirsty. If you have your credit pulled 20 times in a year, right? They're like, this person keeps asking for more money. Let's take it back to being a human again. If
Right.
some person came to you 20 times in a week asking you for money, on that 20th time, you're even less likely to give it to them than the first time, right?
Right.
That person is thirsty and you don't want to lend that person money. Credit works the same way. If you get your credit hit hard a lot and you already have a compromised score, be it from a collection or a late payment or bad limit ratios, right? You're already credit compromised. Having multiple hits will eventually, the credit bureaus are like, all right, this person's just digging, right? Are they
Right.
going everywhere and getting rejected? Right? Are they have no income and so they need to open up 30 credit cards just to keep food on the table? Like something's going on here. Let's dock them a couple points.
Right.
On the flip side, if you have an 800 credit score, You have your credit pulled 30 times, it don't matter.
Right.
Right? Like they ain't going to drop that score a single lick for the person that has great credit. Right. And
Right.
so knowing what your credit score is, an idea of it before having it pulled is a good idea. If there's an option for a soft pull over a hard pull, get the soft pull. It's the same information, right? It's just two bureaus instead of three bureaus, or sometimes it's a one bureau soft pull. But assuming that all your credit information is the same on all three bureaus, even just having one bureau on a soft pull will give you all the same information, right? Um, but I don't know. I think people are a little bit too fearful of the hard pull. But then again, I'm a mortgage lender, so I'm biased,
Right.
right? Like, let me look at it, right? I tell people, I'm like, it's like going to the doctor, right? And being like, man, I got this bad sore on my back. And the doctor's all like, take off your shirt. And you're like, nah,
Right.
you can't see it. Now you
Right.
can't see it. I'm telling you about it. Like, fix it. You're right. Like, if you want me to help you with your credit, I gotta see it.
See it.
I gotta look at it,
Right.
diagnose and then give
Right.
you treatment.
Absolutely. I want to take a minute and see if anybody had, I didn't see any questions in the chat, but I just want to ask if anybody has any questions before we go into Jared's pro tip.
Ooh, pro tip.
Yes. All right. So it looks like I don't have any questions in here. So as we prepare, we're getting closer to 8 o'clock, getting close to that. So this is going to be one of those Wealth Wednesday traditions that I'm getting started, right? So that you guys can walk away with something to work on. So it's actually a two-part. So the first part is, um, well, actually, it goes together. Sorry. What is one thing, Jared, that every viewer can do this week to move one step closer to home ownership or financial freedom?
Mm. Set a budget. Set a budget. I know it's boring. It's horrible. Nobody wants to do it. Sit down. There's tons of tools, right? Again, I think I've said it 30 times on this call, and maybe I'm obsessed. AI helped me with my budget.
Yes.
Uh, you can log into most AIs and go through your bank, right? And you can do it if you bank at a big bank like Bank of America. You could do it on Bank of America, where it looks at your bank statements, right? And especially if you do it through your banking institution, it looks through your bank statements and it puts it in a pie chart where your money's going. Looking at where you're currently leaking money can be eye-opening and
Yeah.
scary. And then having the fortitude to actually cut those things off is even harder, right? But I set a goal. I don't know if I told you this last time. I did that, and I do that for myself I do it in November because I don't want to be thinking about money in December. I just want to bless my family and eat a lot of food and have fun in December. So in November, I do my business planning for the coming year, but I'll also look at my finances deeply. Sit down and talk with my financial advisor, but I'll also look at where did my money go. And in 2025, about 15% of my total outgoes went to Uber Eats, right? Went to Uber Eats and Uber Eats type services. So like Uber Eats or DoorDash,
DoorDash,
obviously, but also what's the one where they deliver the groceries from the store because I feel like I'm
Instacart.
saving Instacart. I'm saving money, right? I'm saving money on Instacart because at least I'm not Uber Eats. I looked at what I was spending on that and I was like, this is ridiculous, Jared.
Right.
I gave myself 12 for the year. That's one a month. I have 12 free passes for Uber Eats to where I can do that in a pinch. So far, we're now what? We're through June. We're into July. I've used three of them. I'm so proud of myself,
That's
right?
good.
And I feel it, right? Like it just became too, I love food too much and it became too easy to do it. If I can, at whatever time of night get Indian food, I'm a sucker. I'm going to do it. I'm going to do it before I go make myself a grilled cheese, right? But I love a grilled cheese. And whenever I'm forced to just make the grilled cheese instead, my finances feel better,
They're
right? I feel
screaming,
better the next morning.
yay!
Yeah, my guts aren't busted the next morning, right? Like they would be if I eat the Indian food, but also my bank account ain't busted, right?
Right.
I don't have to look back with regrets. And I'm eager and this November, whenever I look and see what percentage is going to be, it's going to be so small, right? So like pro tip, less convenience in general. If you can look at your stuff and be like, how can I inconvenience myself but save myself money? right? But no matter what that is, maybe you fly to California to see family, but this year you're going to drive, right? Maybe you stay. I'm not staying in anything less than a Hilton, but maybe this time we stay at the Radisson,
Right.
right? Like, where can I inconvenience myself in my budget to start having a little bit of extra? That's my one thing is budget. Look at your budget. Where am I leaking? Where am I leaking money? Figure
Yeah.
it out and cut it out. You'll feel
Yeah.
good. It feels really good when you do it. Looking
Yeah.
back, not while you do it.
Right.
But
Right. And then you just keep that habit going and it goes from year to year.
I
I
don't I don't
mean,
I don't even like I don't even want Uber Eats right now. Like
yeah.
really, like after like I think the first month I did it like in January. I had it like by the time we got to like January 15th, mom was already gone for the month. February, it lasted a
Right.
little bit longer. I didn't use March or April at all. I used one in May. Like it's just
Yeah.
goes, man.
Yeah. And I think seeing it on paper, seeing it right or on the screen or whatever, it just makes it more like, okay, I see
Real.
this now. Yeah. I
It
see
was,
this.
well, it did for me. It made it real for me whenever I looked at it because I got two kids in the house. An Uber Eats meal is $100.
Yeah.
And you can drop 60 on some Chick-fil-A. It's
Yep.
like I just paid $60 for fast food. Like a bag of Lay's and I can make gourmet sandwiches and still be under $20.
Right.
Right?
Exactly.
Save $40 there. We can eat that 3 times for that one Chick-fil-A meal.
And it's
Shit.
funny that you said that
Waffle
because
Fry showed up cold anyways.
it's
By
funny
the
that
time
you
we got
said
to him.
that because I was wanting some wings today and I was like sitting there
Mm.
like, I'm gonna make a grilled cheese. And that's actually what I had to
My grilled cheese is amazing. I make a great grilled cheese, so
I used some Texas toast. I made it
I
real
put the.
nice.
It's all about you put the butter in the pan, not on the bread. Put the butter in
Yep,
the pan and then just let it sit there and soak it up. Mm.
absolutely. All right. So I absolutely love ending our conversations with action because information only changes, lives when it's applied. You can learn all the things you want, but until you apply it into your day to day, you won't see the results that you're trying to look for. So if tonight's conversation encouraged anybody, challenged you, or taught you something new, please share it with someone else. I'm really trying to build a platform here where people get, real, authentic understanding and information that will help benefit them financially and lead to home ownership because I do think it's very important in what we're doing. So our goal here isn't just to talk about houses, of course, is to help families build stronger financial foundation, one step at a time. And you gave amazing, thoughts about that as well. So I want to thank you so, so, so much for
Well,
sharing
I
your
wish I
knowledge.
well, I wish I had more time and I, open the invitation to anybody out there.
Yeah,
Give me a call. My cell
yeah,
phone is easily findable. I'm sure April will do a good job of tagging it somewhere. It's my personal cell phone. You're never bugging me. Even if you
right,
feel that you're not ready right now, or even if you know you're not ready right now because a lender told you today that you're not ready right now, call me. You're not wasting my time. Let's sit down, let's look at your situation. Maybe I have a different perspective, right?
right,
Maybe that lender only wants to know what they can close within the next 30 days and they'll just push you aside, right? My goal is, and the reason I'm here is because of April, and April's goal is to build long term financial wellness, right? That's what this is all about. So even if you're not ready today, even if you feel like you're not ready today, call me today, right? So that I can give you personalized information that you can then use to where one day you are ready
right.
and you get to reap the benefits of the work.
Absolutely, absolutely. So I just want to thank you again to Jarad. Thank you to everyone who joined tonight. We'll be back. I'll be back next Wednesday. Jarad will definitely be back soon. And
I will
as
see you
he,
soon.
yes, and as he is added back into the schedule, you guys will get that information. In between time, in the meantime, make sure that you send me any questions or any information because while we're doing this every Wednesday, we both do this full time. So if you have any questions and if you
Facts.
have, you need anything, please feel free to reach out. And when I edit this video and put it on YouTube, you will have Jarad's information, his direct phone number and information so that you can reach out to him as well. Thank you
Awesome. Thank you
guys
so much.
again. Thank
Thank
you.
you
Thank
so
you.
much,
Thank you.
April.
I appreciate you guys and I'll see you guys next week.
I'll see you soon, man.
All right. Bye bye.